Okay, let's talk about the $2 trillion market everyone's suddenly worried about, private credit. Yeah, Wall Street heavyweights are sounding the alarm and they are not mincing their words. Top investors are even calling out the very structure of some of these really popular funds. So what's actually behind all this anxiety? Let's unpack the private credit craze. First things first, we need to get on the same page. What even is private credit? Basically, it's direct lending to companies happening away from public markets and filling a gap left by banks. You get higher potential returns than with bank loans, but with less regulation and less liquidity. This whole market really exploded after '08, when new rules made banks step back from riskier lending. But now, after more than a decade of crazy growth, some serious cracks are starting to show. All the concerns pretty much fall into these four key categories that we gotta watch. Let's start with liquidity. It's a fundamental mismatch that's really being put to the test now. And this isn't just theoretical. A huge player, Blue Owl, literally had to block withdrawals. The risk is real. Okay, next red flag, the health of the companies actually getting these loans is getting worse. Get this, a stunning 40% of borrowers are burning through more cash than they're making. And you can see that stress right here. The default rate is now sitting well above high-yield bonds. Some funds are hiding the stress by letting companies pay back interest with even more debt. Things have gotten so serious that the DOJ is now questioning if the asset values are even accurate. And this isn't just a US issue. European regulators see a potential systemic risk brewing over there too. So here's the crucial question. Are we just looking at a repeat of the 2008 crisis? Well, there are worrying similarities, like shady valuations. But what's different is the risk is now spread out. So, how should you think about all this for the rest of 2026? It really comes down to asking tough questions. Are the numbers real? And what's the plan for a crisis? So the market that grew in the shadows of the last crisis is now facing its own moment of truth.